Good evening. Thank you for coming. Uh, we have our friends come from Delhi. They've just arrived. And they're going back after this. I don't think they like Bombay very much. The board of directors of HDFC Standard Life Insurance Company Limited and Max Life Insurance Company Limited and Max Financial Services Company Limited had their respective board meetings earlier today and approved, all the three companies approved entering into a confidentiality, exclusivity and standstill agreement to evaluate a potential combination through a merger of Max Life, Max Financial Services into HDFC Life by way of a scheme of amalgamation. The agreement provides for a mutually agreed exclusivity period for due diligence and discussions between the parties in relation to the transaction. The proposed arrangements would be subject to due diligence by both parties, subject to board approvals of all the three companies, shareholder approval and regulatory approvals, and other requisite approvals as and when necessary. I wish to reiterate at this juncture that all the respective parties are only evaluating this potential opportunity in further detail. We believe that the macroeconomic environment in India today is extremely conducive. India remains the fastest growing large economies in the world with a GDP growth rate of 7.6% for the financial year 16. With 66% of India's population below 35 years of age, favorable demographics provides a great deal potential for life insurance. There's an increasing demand for protection insurance, that's life insurance, and long-term saving products. India's insurable population is expected to be 750 million people by 2020, 5 years from now. And according to a recent research, 5 years from now, the total life insurance premium market is estimated to be $100 billion. Yet, despite this immense potential, life insurance penetration in India as of today is only 2.4%, 2.6% of GDP. This is considerably lower than other Asian countries. South Korea, the penetration as a percentage of GDP is 7%. Hong Kong is 13%. Taiwan is 16%. In India, in financial year 16, the total insurance premium growth on a 5-year CAGR stood at 6%. However, we believe that in financial year 16 was a watershed year, as the combined market share of all private insurance companies, life insurance companies in the individual segment stood at 52%, which is for the first time the private sector insurance company overtook the life insurance company's premium. 10 years ago, the market share of private insurance was only 35%. Against the backdrop of a stabilizing regulatory environment, acceleration in financial savings, improved persistency levels, responsible selling by players, and improved customer service, we estimate that at an industry level, new business premium should grow at around 15% per annum over the next 5 years. And renewal premiums should grow around 10% annually. We believe that consolidation in the private sector would enable the creation of large companies which can then drive economies of scale, thereby servicing customers' interest better at constantly declining cost structures. Currently, an inherent consolidation is already happening, and it is reflected in the market share of private players. Today, there are 23 private players in the life insurance industries. 4 of them, the top 4, has 65% of the market share. 19 of them have 35% market share. Both HDFC Life and Max Life have over the years followed a strategy of consistent and responsible growth to create value for their respective customers and stakeholders. We believe there are significant benefits of a potential combination, and if this materializes, it could make the consolidated entity the largest private insurer in the country. As I mentioned before, the detailed merger and integration contours have not yet been decided. At this juncture, all we can say is that both the brands have a strong recall and trust factor across policyholders and shareholders. The companies are contemplating a merger under the scheme of amalgamation under the Companies Act and hence do not foresee any open offer. We will now enter into a phase of diligence. The outcome of the diligence will have to be taken to the respective boards. The ownership structure will be based on the swap ratio, which still has to be determined and discussed. And the regulators will also have to have a look at it. Finally, to address the issue as regards the listing of HDFC Life, we would like to state that HDFC Life's shareholders continue to be keen to get the venture listed. That means both HDFC and Standard Life are very keen to get a company listed. And the potential merger, apart from creating a platform, it will also give us an automatic listing since Max Financial Services is listed. As you would recall, HDFC Life was the first private sector life insurance company to launch its operation in 2001 and since then has been steadily growing. HDFC Life crossed 500,000 customer mark in 2007. Total premium income crossed 100 billion in financial year 12. The same year, the company declared a maiden profit. A maiden dividend was declared in 2014. And HDFC Life crossed 500 billion assets under management in 14. In 16, total premium income crossed 160 billion and assets under management over 700 billion. HDFC Life and Max Life have several complementary strengths as well as synergies. Both have strong new business margins. HDFC's margin, Life's post-overrun margin, is 19.8%. Max Life's margin is 18%. Both have strong bank assurance partners. The product mix of the potential combined entity will be well diversified. And most importantly, both companies have strong customer-centric business models. To conclude, any potential consolidation has to be ultimately be driven by the objective whether it is value accretive for all stakeholders. All entities involved stand by this objective. As of now, the business of both entities will continue on as-is basis. We will have several challenges on the way ahead, but we look forward with optimism and stand committed towards strengthening and deepening the insurance industry in India. I wanted to say on a personal note also that I have known Mr. Analjit Singh since many, many years, maybe about 30, if not more. And I've known his family, I've known his father, his brothers, and it's a pleasure. I've always had excellent relationship. We have a trust factor amongst us. And to do this transaction, literally, it hasn't taken a long time. And we are delighted, I'm delighted personally. And we hope this works out. Let me now invite Analjit to say a few words.
Deepak Bhai, Amitabh, good evening, and thank you very much for those warm words and welcome, and good evening, friends. Mr. Parekh is absolutely right. It goes beyond that. He has always had his doors open to the Max Group and to myself personally, and over the years, with various businesses, we've sought his support, and he's always been very forthcoming and also been very affectionate in the few times we've had an opportunity to be together and travel together. So I echo absolutely, if not more, of the same feelings. Bombay is actually very important for us, because in one sense, God willing, if all this goes through, two of my largest businesses will have some Bombay centricity to them. I'm referring to Max Touch, and which is a business I personally built by living in Bombay for 7-8 months of every year out of a Nariman Point hotel. And then fortuitously, this opportunity should arrive. I say fortuitously. Why? So we are the largest non-bank owned or led life insurance company in India. And most names that sit below us are very large corporate names with a long history of being in India. We're a relatively medium-sized company with a short history of barely 30 plus years. So in that sense, I say that it is fortuitous that we have this opportunity. We have some figures Deepak Bhai mentioned, but apart from being the largest non-bank led, we have a solvency margin of almost 345%. We have a conservation ratio of about 86%. We are a profitable life insurance company, and a company that has surplus cash sitting in the company itself, in the OpCo. So we've been contemplating for some time as to what should be our next move. And in a manner of speaking, being a large non-bank led company and so on and so forth, we said we can't just sit in the same position. Because if you do that, you have a threat of degrowing and losing your position in the league tables. So we said basically there are three options. Stay where you are, go out to consolidate or acquire a smaller company with less operating experience, with meager performance, which is frankly true. If you draw a line after the first 6 or 7s, the others sort of fall away almost. Or do the best thing for the company, which is to trade up and merge with an iconic brand name of HDFC and the substantially larger operation. They're almost double our size. And if you merge that, then becoming the single largest private life insurance company, there's very little that one can do to shake that position. And we've demonstrated our thinking before in that regard. We've always been happy to be a smaller portion of a bigger play than vice versa, because that's what is best for the stakeholders. Stakeholders, and I'm not being diplomatic here, but stakeholders in terms of shareholders, stakeholders in terms of policyholders, stakeholders in terms of partners, and so on and so forth. And there is a cultural match here between the way HDFC thinks and works and the way we think and work, both very highly value-led and so on and so forth. So for us, there could have been no better opportunity to shake out of this standstill mode of where the media keeps talking about, some consolidation in the insurance industry. Somebody said April 1 will come, there will be open architecture, something will shake up, then there will be a new government, there will be a new prime minister, there will be a new regulator, and the regulator will do funny things, which is sort of the case. And so that will lead to some sort of a consolidation somewhere. But the truth is no worthy consolidation or shift, or nothing has really shifted in the industry. And there seems to be, the 6 top companies seem to be doing well, and the other laggards continue to be laggards. And there's no point just staying in that situation. So we are very happy to pursue this opportunity and find alignment in terms of what's best for HDFC and what's best for us. And that's really why we have come to this a position that we have. And I think that in a very short period of time, we will ink the necessary mechanics around this merger, and then followed by the usual process of 2 schemes of arrangement that will have to follow, which is first Max Life merging with Max Financial Services, and then Max Financial Services merging with HDFC Life. therefore making the combined entities listed. I think that's where we are coming from. And we feel very comfortable being in this party with HDFC, with HDFC Life, with Mr. Parekh, with Amitabh and the rest of their team. So I think on that note, I'll go back, and if there are any questions, we'll certainly talk about it.
Wow, Mr. Parekh, this is Ashwin Mohan here from ET Now. Mr. Parekh, this is Ashwin Mohan here from ET Now. Mr. Parekh, this is Ashwin Mohan here from ET Now. Mr. Parekh, this is Ashwin Mohan here from ET Now. Firstly, if I could just congratulate everybody on the dais. This is Ashwin Mohan here from ET Now. Mr. Parekh and Mr. Anindeep Singh, thank you so much for getting back to the focus on the insurance sector with this big bang potential deal that has been envisaged. I know it's still early days, but if you could just throw some light on the synergies, the potential synergies that could arise from this deal, especially in terms of the product portfolio. And my follow-up question is, there's a complex shareholding pattern because as Mr. Singh was pointing out, there are many other players, overseas as well as domestic, who have substantial stake in both the companies. So will the complex shareholding pattern perhaps supposed to be a challenge in terms of completing the deal? So on those two aspects, if you could throw some light, please. Thank you.
Get part of the pie. So it is going to be in that pro rata. Max Financial Services 100% subsidiary is Max Life. 59, sorry, 50. Yeah. But when they merge, the respective shareholders of both the companies will get shares in that proportion. And when they merge with us, the shareholding again will be divided. And each shareholder will get a share of the new company, of the HDFC Life. So I don't think there is any problem in that. But we have not yet worked on the ratios, and we'll see how it works.
Mr. Parekh, can I take another question now?
Sorry? On the product portfolio, I'm coming to the product portfolio. Product portfolio is well diversified. We have a larger share of unit linked. They have a lower share of unit linked. They have a larger share of on-par products. We have a long-term savings, which is larger share. We have a lower share of that. They have a very good distribution network of agents. We have a lesser number of distributors. So it sort of gels in extremely well.
So just
one minute, we'll get everyone a chance.
Yeah.
These are good questions you've asked. You see, we mastered the agency system. It was called the New York Life Gold Card Agency system. And we mastered that, which is why we became an agency-led business. And so the question you raised is very important. So when you take our stance in agency, you take our stance in making banca work, because we've had to earn our stripes to make banca work, because we did not have HDFC Bank. So there were no hugged arrangements. So the extent of how our bank assurance arrangement works, it is integrated at the IT level, at the training level, at the HR level, at the reward and recognition level with Axis Bank. So if you take agency, you take that, and you take the leaning we have towards more savings and protections relative to the ULIP and investment related products that HDFC Life has, this circle is totally complete with this merger. So all strengths being resident in the merged entity. And I think very strong, which is why I said that I don't think, unless we do something terribly wrong, there's nothing that should shake us from keeping that number one position.
Mr. Parekh, Nisha Podar from CNBC TV 18. Two questions that the market was really a little curious about after this particular deal got announced. First of all, you have clarified that there won't be a separate IPO because this itself be a natural IPO. I would like to ask, was this an easier route for an IPO for HDFC Life? And the second bit that everybody wants to know is what will happen to the shareholding, because there are two foreign players involved in this. Suppose the merger is Standard Life and Mitsui Sumitomo, both of them are going to continue, or is there a chance of Mitsui Sumitomo really exiting from the company?
So far as the listing is concerned, we get an automatic listing without going through the process, since Max Financial Services is listed. So it's a very neat way of getting listing without going through the hassle. So far as the foreign shareholders are concerned, we have to talk to them. Standard Life is on our board. They were party to our discussions today and in the last couple of weeks, and so has the Japanese Mitsui been in discussions with them. They both have blessed this transaction up to now. Now we have to work the ratios, we have to see what shareholdings each one will get, and then take it on from there. So both the strategic partners are aware of this transaction, both sit on our boards, both were present for all the meetings, and both have agreed to it. Now the work starts on diligence and that, and we'll see what ratios come out and what their ultimate shareholding will be.
Sir, Saraswati here from Business Standards.
Absolutely, no, absolutely right.
Okay, I have a question for Mr. Anand Singh. Okay, a rough calculation, Mr. Singh. If I do, after like the deal structure, what you both explained, I think max shareholding in the combined entity will fall down to 25% from the current 68%. Will that also imply that there could be a holding company discount now? Because you will, if I'm a Max India shareholder, I will be at a holding company level, implying a holding company discount?
No, but there is a holding company discount. The company is listed.
There's no holding company.
No holding.
Sir, Saraswati here from Business Standards.
Sorry, you just
No,
listen.
one at a time, please. There's no holding company, no? As Mr. Parekh has explained. So you have Max Financial Services, you have Max Life.
Yeah.
Max Life gets merged with Max Financial Services. HDFC Life gets merged with Max Financial Services. Max Financial Services is listed today.
Okay.
So there's no whole co. There's one co.
Got it. Second question. Okay, it seems that for you the more focus going ahead would be Max Healthcare, because I think you sold your personal 10% stake in this company at a very lower price to KKR a few months back. What is your strategy going ahead? Because you will have 3 entities. Am I right in assessing that Max Healthcare could be a big vehicle for Max Group going ahead?
Yes.
Mr. Singh, you would like to continue as a very small, minority shareholder in the merged entity, or are you going to exit it eventually?
Are you talking to me?
Yes.
Then repeat your question, please.
Yeah, so are you going
It looked
to,
like you're talking to Mr. Parekh.
Sorry. So are you going to continue as a minority shareholder post the merger ratios are really defined for this merger, and stay on with this merged entity, or you have plans of exiting the company?
If Amitabh continues to doing the good job that he's doing, I don't see what the hurry is to leave.
Sir, Saraswati here from Business Standards. Sir, Saraswati here from
Sorry,
Business
sir,
Standards.
could I just finish one question on the financial contours? What will the valuation of the deal be like? I know it's still initial stages, but could you give us some sense?
Valuation of the deal. Eh?
I know it's an arbitrary question right now because you guys are still going through a lot of things. But one thing which comes to our mind again on historical perspective, HDFC Life on a historical basis, when Standard Life increased the stake, on that if we value it, it was around 1.9, price to embedded value. Current price of Max Life, depicts around 2.4, 2.5 times. Mr. Parekh, don't you think it could be expensive at the current value of Max Life? I'm just asking as an industry perspective, do you think that going ahead, whatever industry multiples are here, they will stretch going ahead, because the growth rate assumption for the industry right now is 14-16% compared to what in middle single digit what was done
We
earlier?
can't answer that question because we don't know the answer yet.
सर तरुण शर्मा फ्रॉम जी बिजनेस सर, आपने अपनी स्पीच में कहा कि कई चैलेंजेस हैं इस डील के अंदर, सर क्या चैलेंजेस हैं और सर कितना टाइम पीरियड में ये डील पूरी क्लोज हो जाएगी, वो टाइम पीरियड यदि आप शेयर कर सकते?
Challenges are there because we need number of approvals. We need IRDA approval. Max Life will need IRDA approvals. We need to go to High Court to get High Court approval. We have got to get CCI, SEBI, CCI. So the High Court, because the merger has to go there listed in Chandigarh. We'll have to go to the High Court there. we are here. So, there are these complications. There are no other complications.
Well, Mr. Parekh meant there are many steps we have to take. That's what he meant. By the way, to your question of synergies, I just also realized that when we talk about our product portfolio or product stance, or we talk about distribution sense, or we talk about conservation ratio, or we talk about those sorts of things, they haven't fallen from the sky. There is a team that's been driving that for 15 years. So that's the other synergy, is the experience that comes in our team that has delivered that performance. In light of, particularly, if you go back 15, 16 years, we were not in the financial services business. We were not in the consumer service business. So to have attained this position came with a lot of energy, with a lot of teamwork, and with a lot of focus and good execution. That is something that this merged entity will also harness. And at the end of the day, in the environment in which we work, seeing the attrition that you do, the value of team is very hard to assess by way of, a multiple or EV or anything like that. So don't forget that when I said some very little can shake us, is if you got the right people, nothing can shake you.
And on your question.
Yes.
And your question on timeline, we hope that this due diligence and this confidentiality period, we can complete our valuations and get fairness opinion and all that in the next 60 days. And after that, we have to go to IRDA and go to respective shareholders, board of AGM, High Court. So I think the entire process should take 2 months and then 10 more months. So around 12 months, we hope we can close this.
So with respect to the IRDA approvals, we do see any...
So just one question to Mr. Parekh, sir. So in my very little understanding of the entire, my name is Poonam from ET now. My little understanding of covering the entire sector, what I'm understanding is that the merged entity would now be a part of Max Financial Services, which is the listed entity.
There will be no Max Financial Services.
There will be no
Max Financial Services,
the company will be HDFC Life.
So the merged entity then is a part of Max, the listed entity, or the part of HDFC Life? Because here's the confusion. Yes.
No. So here we are. So there are 3 companies.
Yes.
Max Life,
Yes.
Max Financial Services, and HDFC Life.
Yes.
Or I should say Max Financial Services, Max Life, HDFC Life.
Yes.
So first Max Life and Max Financial Services will merge.
Okay.
So you've got...
And Max Financial Services is listed.
Is already listed
Yes.
today.
Yes.
Correct?
Yes.
Now just separate these two by a paragraph.
Okay.
Now Max Financial Services goes and merges with HDFC Life.
Okay.
And Max Financial Services will drop off.
Okay.
And
So
HDFC Life will remain. So
Yes.
there's no holdco.
absolutely.
And because MFS was listed,
yes.
HDFC Life becomes listed.
Okay.
Mr. Parekh, you said
Thank you
the
so much.
agreement...
So if you were being very polite,
Yeah.
trying not to say that will Max Life and Max Financial Services disappear, the answer is correct.
Yes. Thank you. Thank you for
Sir, Saraswati here from Business Standard. Just wanted to understand with respect to the reverse merger and the listing that will happen, since the industry hasn't seen, the insurance industry hasn't seen this in the past. Do you see any hurdles from IRDA with respect to approvals? And also, Mr. Parekh, first week of June, you'd also announced HDFC Ergo and L&T merger. So within 1 year, do you see both of them getting completed?
The HDFC non-life, Ergo and L&T merger is much simpler. None of them are listed. We are taking it over. It's a reverse merger. And then we will change the name back to HDFC Ergo. And there are only 2 shareholders, HDFC and Munich Re, 51-49. That will remain. There's no complication there. And that application, we have talked to IRDA, is made to IRDA. It's with IRDA now. So that is on, and this we will make the application to IRDA after we complete our work in the next 60 days.
A very small
Mr.
clarification,
Parekh,
sir, if I could please take it.
Mr. Parekh, this is Sajid here from Bloomberg Quint. You spoke about the sizes of both the companies, Max Life and HDFC Life. HDFC Life is nearly 2 times the size, and on every parameter it's nearly 2 times. Post the merger scheme of arrangement is when it completes. HDFC Life is expected, HDFC's stake in the merged entity will fall from nearly 60% to around 40%. That's what the market estimate is. In that case, will you be looking to increase the stake beyond 50% again, or is it you will go by the current draft regulations which have come 2 days back about from IRDA, where the promoters can hold up to 50%, minimum of 50%, which includes the foreign promoters?
After the swap ratio is agreed to, whatever shareholding comes to HDFC's holding will be our shareholding. If it's less than 50, yes, it's less than 50. In any case, if we did an IPO, 25% of the IPO has to be listed. So we had to come down below 50% when the full 25% was listed. So it'll come down. We have an option to go up. Promoters always have a right to acquire 5% every year. It'll be a listed company. We can acquire, Standard Life can increase their stake by acquiring 5% from the market. That options are always open to us.
And currently, Mr. Anurjit Singh holds a stake in the insurance business via financial services. Now he will be holding directly into the merged entity, right?
Correct. And therefore, as Mr. Parekh said, after the merged entity ends up becoming listed, everybody is free to, within the creeping limit of 5, you buy, sell, you go up, you go down, you exit, whatever you like.
Will you be classified as a promoter of the merged entity, or will you be as a shareholder?
I don't know yet. I think that's one of the things that they need to be. But it doesn't matter. What difference does it make?
You can exit if you're not a promoter.
Yeah, that's a good. So as I said, these are some things that have not been precisely figured out here.
Mr. Parekh, Mr. Shefali Anand.
But you see, the point is, actually my response to your question was, why does it matter? Because what matters is how we have come together. So whether we are or not, the fact is, today we are, right? Of one part of the two merged entities. So after that, whatever it is, it doesn't matter. You still have the option of going to market and buying or selling.
There is Axis Bank part of the cost also. Will they stay in the merged entity or they will?
Yeah, we have a contractual agreement with Axis Bank, which lasts till 2021. So the Axis Bank piece is very much a part of this business.
Your press release says the agreement provides for a mutually agreed exclusivity period for due diligence. When does that period of due diligence expire? What is the mutually agreed upon period? Is it 60 days, as you said?
60 days.
From today, is it, Amitabh?
60 days.
60 days from today.
Okay, thank you.
Mr. Parekh, this is Shefali Anand. I'm with the Wall Street Journal. Quick question on what is the amount on the table?
Yeah, go ahead. Louder.
What is the amount on the table that you're discussing HDFC would pay for this acquisition?
So, just to clarify, there is no cash being paid for the three entities merging with each other. As we said, we'll exchange shares. So when Max Life merges with Max Financial Services, Max Life shareholders will get, the shares will get cancelled, and when they get actually merged with HDFC Life, they'll be issued HDFC Life shares in a listed entity, because we'll emerge, a listed entity will emerge. So in a way, they will get shares in a listed entity, and as Mr. Parekh and Mr. Ranjit Singh said, then you can increase the shareholding or decrease the shareholding depending on how it goes.
So
there is no cash being paid.
Okay,
per
so what's
se.
the valuation that's being...
So swap ratio, when it will be determined, we'll come back to you.
Mr. Parekh,
this is
Anirudh
$2 billion.
from Mint newspaper. Myself, Anirudh from Mint newspaper. I have a question. What does it mean for the policy holders of the two companies? And since you mentioned, we all know that the kind of policy portfolio, the insurance portfolio that the two companies have are slightly different. One focuses more on ULIPs, one focuses more on long-term savings and mostly participating products and all. So what does it mean for the policy holders, this merger? Does it really matter to them? That is number one. Secondly, also after this merger, what kind of growth synergies do you see? Because the two companies have, different expense management right now, and that may be because the two companies focus on different channels of getting business. So how the expense management will be impacted, and what kind of growth that you see in the coming years? That is number two. And number three, there could be similar policies also. Those will be phased out. And what happens to the employees of the two companies? Will there be any retrenchment? Or have you thought about these things at this stage?
See, all this is ideally, we would have liked to meet the press after we had the swap ratio and everything. But the Indian press is so inquisitive these days and also very innovative. They try and find out before any deal is done. And many times I know deals have collapsed because of your intervention. We knew this can't remain a secret for 60 days. That's why we did this intermediate arrangement. And we went to SEBI and we told them we are just announcing an intent to talk together to see whether there is a deal or there is no deal. So all your questions about what happens to the policyholders, what is the final equity stake, all we have not yet discussed. If you believe me, I have met Analjit only once and we've come to this position. So we have to now sit and talk.
So hi, this is Manoj Dara from Z Business. My question is to Mr. Analjit Singh. Sir, आपने Axis Bank को concessional rate पे equity दिया था, and that was intended for the long-term relationship के लिए. Where does this relationship stand?
Say again, please.
Sir, आपने Axis Bank को equity दिया था.
Axis Bank को, जी.
और that was at a concessional rate, and that was intended for a long-term.
They are shareholders. They have the equity.
Sir, अभी वो relation कहाँ पे?
नहीं. As we mentioned,
yeah,
that we have a fresh agreement with Axis Bank till 2021. Under that agreement, they own how many percent?
5.5%,
4.9 or say 5% they own. So that they are 5% shareholders of the company. And that will go in the same pot that Mr. Parekh talked about. So they will also, if the fair market value of the merged entity is higher than today's level, they gain.
So you know, on your question about growth, we have two big banks now as part of our bank assurance partner, HDFC Bank and Axis Bank, as a result of the integration. Apart from that, we have smaller banks. We have 2 or 3 smaller banks. Max has 2 or 3 smaller banks. 9 or 10 of them. Lakshmi Vilas, and a lot of banks are there, Yes Bank and others. So we hope that the growth of the combined entity will be much higher because we have more bank assurance partners working for us. And as I said, they do not have, they do not have a bank in their stable. So their distribution network is far superior than our distribution network. And so we hope that their distributors will continue to bring the kind of business they have been bringing. So the growth question you asked, we expect double-digit growth now in the merged entity.
Amitabh, if I could get you at this point of time, because as Mr. Parekh and Mr. Analjit Singh have told on the synergies and the macro of this particular deal, going forward you would be the captain of the ship steering this. Where do you see the primary challenges, and in terms of product mix, because at this point of time we all know where their strengths lie and where your strengths lie. So would that be a balanced portfolio right from the beginning, or will there be some overlap? And also, if I could if you could just throw some light on the financials of FY16 for HDFC Life in terms of the embedded value and how have you closed the year?
So he can throw that light, we can throw the light on this, and then the lady has an answer, right?
No, very quickly, I mean, as Mr. Parekh and Mr. Analjit Singh have already said, that the complementarity in terms of the product mix, the channel mix is incredible. I mean, we have, as Mr. Parekh mentioned, that we have a higher ULIP base, they have a lower ULIP base, and all of that. So when you kind of combine the two entities, frankly, it's a much better diversified entity in terms of channel mix, product mix. I do want to emphasize, I think Mr. Analjit Singh mentioned it, that the management team of Max Life is very well reputed. They have a great number of people and the kind of team they have developed over a period of time. We are proud of what we have developed. I think if the two entities come together, I think we will have the best potential management team in the industry, and that the value of that cannot be missed out somewhere. So we both, the promoters, are very, very conscious of the fact that we should capitalize on these two strengths which are coming together in terms of the management team also, and we'll work very, very hard to ensure that all the talent in the two companies is retained as part of this merger, so that, as Mr. Parekh talked about, I'm just picking up the pieces and connecting it, that the growth rate of the combined entity can be much better than what both of them individually are recording. So I know the reason why, as Mr. Singh said in his opening address, the reason why it made sense for the two entities to come together were very, very obvious. High, we already have high margins. Expense management is under control. Product mix is complementary. Management teams are very strong. Channel mix also kind of, gets diversified. Bank assurance becomes very, very strong. I mean, we will become number one in many, many ways, which you can't even imagine. And that's why this makes sense.
And there's another factor. I think to have two operations in two parts of the country is another strength. No matter how hard you try organizationally to be present across this very, very, very large country, and particularly the two largest markets, which is Bombay and Delhi, to have significant operational execution strength that is in situ in these two locations is actually a positive. You think of other companies in any other business, most people, they end up being locally centric, whether that local is city or state or whatever. They become, their best business is driven there. So our largest market is Gujarat. So if you take Bombay, you take Gujarat, and you take the north, obviously we are the largest there. Look at the impact of that. So it's too early to flesh out whether all of that 2 plus 2 will be 5 or 6 or 7 or 8. We don't know. But it better be more than 4. That's for sure.
So Bijoy from Cogensis here, sir. First of all, like you mentioned about the media, but complimenting you on keeping this under wraps, at least till this point of time. So one is that. Second, just to clarify on what Amitabh said, so the top management of Max Life stays on. Is that the sense that they will continue to stay on as partners in building the merged entity? Also, because you will become the biggest private sector player, do you expect any issues from the CCI? Because that's happened in the past where deals have gotten stuck at that level. So do you expect issues at that level?
So as far as the management team is concerned, as I mentioned, our intention is to retain every top management talent in both the companies. And if it means that we have to over-invest a little bit, I think all the promoters are quite clear that makes sense to do that, because we can afford it, and frankly with the kind of opportunities which are opening up in the insurance industry, I think it makes sense also. So very, very clear that yes, that is a very important objective if the merger goes through.
The other thing which I might add is that we have agreed that after this 60-day period, or frankly as soon as possible, we will work together in a coordination committee with people from both sides, us included, to be able to actually work through some of these operational planning, these coordination and integration over a period of time. So that will start, and that will give also a very good signal that the very best output can be done, through this kind of discussion.
As far as CCI goes, since you asked that question, the combined market share of the two entities will be still way below, say for example, what LIC has. The combined market share of the two entities in the private sector will be about 24%, depending on how you cut the numbers. But if you add LIC to the mix, it will be down to 10-12%. We believe, obviously we have to go to CCI, and it will take time, but we believe that the market share has not risen to a level where they'll turn around to us and say that LIC can be at 50, but you can't go to 12. So we are hopeful to go through that. 24% odd. We're just adding the financial to 16 numbers. You do the maths, that's where you come.
But that's only private sector.
That's only private sector.
If you add the whole thing, if you put LIC into it, it's much, much smaller.
So it'll become kind of almost
half of that. Yeah.
Mr. Singh, this is Sajid here.
But I'm, with no disregard meant to number 2, it all depends on how you measure it. If you measure it on policies, that's possibly must be the case. If you measure it on persistency, conservation, quality, new business margin, etc., I think it would be 1 and 2.
Mr. Singh here.
No, yes, these are important things. We're trying to, because what we know, we can share with you. That these are facts. What we have to now work out is mechanics, as Mr. Parekh said, over the next 30, 60 days.
Mr. Singh, you mentioned that you had 3 choices with respect to the growth trajectory of Max Life, and you opted for merging into a bigger entity because that's the best deal for your shareholders. Yes. You also have the Max Healthcare here, or the Bupa business which is there.
Yes.
Will you look at a similar kind of thing to enhance the shareholder value for those shareholders as well?
So if you, in the demerger, if you look at the demerger, we demerged one company into 3 companies. We did not put Max Bupa in Max Financial Services. We kept Bupa in Max, what was christened or rechristened Max India. So the cluster we kept in Max India is Max Healthcare, Max Bupa and Antara Senior Living. Because there is a life care, health wrapper onto that cluster of three. So as far as we know, there is absolutely no intention other than to grow all those three verticals independently and therefore grow Max India.
Thank you.
So, hi, this is Hamsini from Business
And
Standard.
sorry, if I may just, sorry madam, if you look at our partners Bupa, Bupa has, they call it something else because in England that's a different nomenclature, but they have a senior living business within Bupa. It's substantial. Actually, it's almost the same size as their insurance business. So for us, that's a cluster which we are going to grow. Sorry.
I have a question to Mr. Amitabh. The timing of this acquisition or the merger seems to be very interesting. It just follows ICICI coming up with its IPO plans. My question is, did you think a reverse merger or a deal of this sort was easier than IPO process itself?
I wish I could answer that. Why not? What's the question? So if they didn't think that, they should have, and if they did think that, why not?
Are you a buyer at 25,000 or a seller? We don't know what the value will be. We really don't know what the value will be, with the combined value will be, unless we find the swap ratio, finalize the swap ratio. So it's too early to say.
But sir, if you don't mind, I can add, the level of interest at least we saw in HDFC Life, IPO, and I think the HDFC Limited has seen as they've gone on the road shows has been extremely high. So I think, I don't know what price, but in terms of the interest and whether 10% would have been easy, yes, I think, unless obviously we have to perform, it would have been very easy. So it's not that we've gone for this option because it's the easier option. We've gone for the right option, which makes sense for us to come together. That's about it.
And I can add one more thing, that when our board did decide to go for an IPO, there was no conversation between us. The conversation honestly started 2 weeks. So the IPO process had already started. We had an IPO team, we had appointed bankers, but then this worked out. So that is put on hold at the moment to see how this progresses.
I want to, just on a personal note, we have, and we've talked, Deepak Bhai, if you remember, the right way of doing things. We followed that approach in terms of transparency, openness, governance, etc. And finally, I'm very pleased and relieved to say that the market has started giving some attention and respect to governance and transparency rather than just pure numbers, because sometimes numbers are not to be believed, but they learnt the hard way. So when Amitabh says that it's just not simply of taking some financial valuation or mathematical valuation, I hope that part also will give us a kicker. And so, he's absolutely right. If we just had more time, we could have been more explicit. But there's one man sitting in this room, he's sitting there, Mr. Srinivasan. He has been the person that brought this opportunity to us, and for 2 or 3 weeks, that's all we've done. But it may look to you that it's been going on for 2 years, but it hasn't. So Srini, on that note, I have to compliment you. I'll take up my other things with you later, but on this one, I have to compliment you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.